Hello everyone, we are Luxury Economy class, and we are excited to share our insights into Portage Bay case. We break our presentation into 6 parts, and let's get started with executive summary. We split key issues into 3 different problems: Amazon case, Goldman Sachs case, and how to develop competitive advantage. We conclude that Amazon and Goldman Sachs should be included. Portage Bay could improve data processing and analytical skills and add ESG training courses as its service.
For client 1, we evaluated whether Amazon should be included in climate funds by analyzing 2 main factors, its ESG performance and profitability. To conclude, based on Amazon's moderately positive ESG efforts and potential profitability, we recommend this consideration for inclusion in climate funds. Starting with ESG performance, we assessed 4 dimensions: carbon intensity, greenwashing, clean energy, and adaptability to changing environments. First, regarding carbon intensity, as the graphs show, Amazon's performance has steadily improved. While it may not outperform Walmart, the largest retailer, or Microsoft, the main competitor of AWS, due to logistic-related emissions, Amazon still demonstrates strong carbon intensity compared to global e-commerce platforms such as eBay and Rakuten. Next, Amazon faces greenwashing concerns, including underreporting emissions, misleading eco-labels, and challenges about carbon neutrality claims. While Amazon doesn't falsify data intentionally, gaps remain between its commitment and actions. On the renewable energy front, Amazon is the world's largest corporate purchaser of renewable energy. It continues to invest significantly in wind, solar, and nuclear energy while enhancing energy storage capacity, showing clear progress in this area. Lastly, Amazon has shown adaptability to stricter environmental regulations. By committing to visionary goals and forming partnership with third parties, it addresses both regulatory requirements and consumer demand for environmentally friendly products, demonstrating its readiness for a low-carbon economy. Moving on to profitability, we use 4 indicators to evaluate its performance. As shown in the graphs, Amazon maintains a healthy net sales growth rate. On the right, indicators such as ROE, net profit margin, and EPS performed well in previous years. Although these metrics faced a sharp decline in 2021 or 2022, their subsequent recovery highlights Amazon's resilience and potential for future growth. In conclusion, Amazon's proactive climate actions, promising financial recovery, and positive stock prospects make it a strong candidate for inclusion in climate funds. However, further alignment between its sustainability claims and actions will strengthen its case even more.
Now, as for client 2, we break down the evaluation criteria into 2 main factors: gender diversity and profitability performance. Other branches will be explained later, leading to the conclusion that Goldman Sachs is recommended for the portfolio inclusion. Let's begin with gender diversity. For quantitative gender metrics, we highlighted 2 insights. On the left side, we could see the workforce composition between genders getting closer to 50-50 over past 4 years. However, on the right side, we can find that at higher salary quartiles, the representation of women significantly decreases. To sum up, though quantitative data may seem a little unequal, greater emphasis should be placed on gender inclusion initiatives for a more accurate analysis, since the above may result in a common pattern among investment banking industry. So, on the next page, if we dive into the initiatives they promote, we can actually find them devoted in closing the industry's gender gap. The effort, for example, cultural initiatives and gender-neutral benefits that arouse awareness among genders and create an inclusive work environment, merit-based recruitment, which imply a commitment to talent retention through neutral recruitment principles, and lastly, external gender initiatives, aiming to encourage women's participation across the industry value chain. Next, let's dig into profitability performance. As an industry leader, Goldman Sachs maintains its position as a premier investment choice. From the first graph, we can tell its CET1 ratio stays well above the minimum requirement, demonstrating strong capital buffer capacity. And from the latter three financial index, they shows that Goldman Sachs performed either above the average or stayed at the lead position in the industry. Yet, before we jump into the conclusion, let's elaborate on how gender diversity may impact on stock price. In our point of view, gender diversity doesn't directly drive stock price. Instead, it serves as a long-term value driver, which translates into shareholders' value when combined with sustainable profitability. Below, we can see the three factors listed are enhanced decision making, which a more gender diverse leadership team would bring varied perspectives and foster greater gender policy implementation. And second, talent attraction and retention, which improves employee satisfaction, then consequently decreases recruitment and training cost. Third, brand value and reputation. Since millennials and Gen Z were more value driven investors, paying attention to gender diversity aligns with modern ESG trends, then accordingly attract more investors. In summary, consider that Goldman Sachs' stock price performance has demonstrated its strong risk management capabilities and organizational resilience, combining with the overall analysis mentioned in previous sections. We concluded the inclusion in the ESG ETF portfolio is recommended. Moreover, gender diversification strategy may serve as one of the key factors in directly supporting its recent robust performance.
Apart from stated problems, we also define two underlying issues. The first issue is lack of transparent data and agreed definition of ESG investments. The main barrier is the lack of transparent and reported data. Also, to motivate investors to increase sustainable investments, we need to make investment align with their personal preference and increase open information. Amazon case also implies that Amazon has doubt about greenwashing behavior. To solve this issue, we suggest Portage Bay could keep developing data analytical skills. The other one is the hesitation in social and governance investments. Most ESG ETF aim at environmental issues. However, investors still care about social and governance indicators. Moreover, in the Goldman Sachs case, it's hard to assess firms' social performances. To respond to this issue, we suggest Portage Bay could help users build a deeper understanding about social and governance aspects.
Now, let's move on to the corresponding solution. Based on the analysis above, we believe that Portage Bay can help make a better ESG investment decision. It comes with two parts. First, Portage Bay should enhance the insightfulness and credibility of data. Second, we should raise awareness and educate the public on ESG topics. By doing this, investors and managers are able to make investment decisions based on objective facts rather than reports published by third-party institutions, making investment products are more credible and differentiated because more information is revealed when selecting the portfolio. The first strategy is that we suggest Portage Bay keeps focusing on its data analysis skills, enhancing data insightfulness and credibility. Based on the case study, we can know that 63% of investors value governance in ESG investments, and 71% cited incomplete or inconsistent data as the biggest challenge for investments. Therefore, Portage Bay is here to help. We focus on two aspects: insightfulness and credibility. By leverage its machine learning and benchmarking ability, Portage Bay could provide more social and governance-related information and qualitative data, which solve the current problem with incomplete data that leads to underinvestment. For credibility, it should make data collection and calculation process more accessible to users on their data platform, which will be introduced later. Our second strategy is to increase understanding of ESG among the publics. We have two approaches. First is to build up a data platform that provides different subscription plans that cater to the needs of smaller fund managers and investors, along with integrated AI chatbot that provides timely assistance and user-friendly interface. We believe that this service can attract more smaller-sized investors, which aligns with Portage Bay's goal and make ESG data more transparent and available. The second one is to establish an ESG training course that aims to better educate users on ESG topics, especially about greenwashing and controversial issues, as well as selection criteria of social and governance-related investments. Last but not least, the ESG Data Platform User Guide. As we mentioned above, investors are paying high attention to social and governance fields, but the lack of knowledge and objective data make them hesitate. Our plan not only provides the right tool and the right data source, but also the correct mindset and knowledge for investors to make decisions that suits their preferences the most. Finally, our ultimate goal is to attract more ESG investments, which gives motivation for firms to fulfill ESG practices and leads to better ESG-related performances. We believe that this creates a positive cycle in investing environments and helps Portage Bay build a sustainable business pattern.
We mainly summarize our strategy into 3 sections to solve underlying issues. The first one is strengthening data processing and analytical skills to make data more comparable, various, and credible. Also, it could help investors reduce greenwashing risks. The following solution is founding a data platform and subscription plans to smaller managers to make data more accessible and reduce the reliance on third-party rating system. Lastly, developing the ESG training courses to help users interpreting social and governance indicators and raise awareness in ESG investments. In conclusion, Amazon and Goldman Sachs should be included in the portfolio. To improve its services and differentiate itself, Portage Bay could keep improving data processing skills and develop ESG platforms and courses. Thanks for listening.